and Mr. Dilip Sangvi has said that the momentum has continued.
Absolutely. Ekta, thanks for that. Nishal Maheshwari from Centrum and Anand Tandon now joining us. Gentlemen, good afternoon and season's greetings. Nishal, your thoughts on Sun Pharma? It's a stock which has actually started to outperform after being an underperformer for so long.
Yeah, afternoon Anuj, and season's greeting to you and your team there at CNBC Tv18. Yes, and I think after a long time, basically for the last 2 quarters now, it has been doing well. And we have always been highlighting that Sun has to get it right, basically on the specialty chemical side. And last quarter was obviously coming from a low base. It grew 90%, again, another 43%. And on top of it, we've seen margins improving basically. And that was expected basically as the specialty chemicals start, business starts doing well. For them, basically, it will increase the margins. So I definitely see more such good quarters as we go along.
Okay, so your positive initial is, the sense that I'm getting on Sun Pharma. Well, let's get it in Anand Tandon as well. Anand, earlier today we had a new logistics company that could be, getting listed in the next couple of months, Delivery. That will be, I think, a more B2C. But the other logistics stocks, all of them have absolutely fired up today. I was looking at a couple of numbers. I think Delivery does approximately 4,000, 5,000 crores odd. They're looking at a valuation of around 6 billion odd. So that would be close to 8 to around 10 times sales. Some of these companies are trading at around 1 times. Now, that's the only, data point that I could figure out because all the logistics stocks are flying away. Have you been tracking that space and would you be positive on any of the already listed stocks?
Well, this is a space where the margins somewhat remain squeezed because, at the end of the day, the kind of value add that you are getting out of this gets competed away very quickly. If you charge too much, somebody else will come into the fray, and if you don't, you won't make enough money. It's hugely dependent on the manpower that you have. So the variable cost component is a very high part of the revenue. Which means that margin expansion is going to be somewhat difficult to achieve even if you have large economies of scale. So if you are looking at companies in the logistics space, clearly those which have the highest entry barriers or the highest moats, as it were, will be the likes of Blue Dart and so on, where there is actually more niche kind of market, both in terms of higher premium paying customers like the financial markets, rather than just simply a delivery platform. For now, obviously, the scale-up has been tremendous because with all the action going on in the online space, you need more and more pin codes to come into the delivery market, and some of the larger companies don't go there. So therefore, the growth can be quite very sharp in the near term, which probably explains why the market likes the kind of companies that we're talking about. But I think you need to keep in mind that, as I said, there is a limited margin expansion that will happen even with scale, and therefore that will keep some cap on the valuations.
Okay, by the way, the defense stocks are surging now after that news about that bumper order from some of the defense companies, likes of HAL, BEL, BHEL. Some of these stocks are seeing a bit of a rally right now. Hindustan Aeronautics in particular is the one which is seeing a surge intraday, 2% higher on that. But Dabur just posted their Q2 results. Mangalam, how's it looking?
Well, all numbers are above what the street was working with this time around. So it's a good show coming in for Dabur. The revenue is coming in at 2,800 crores. Street was working with a number of 2,670 crores. Or EBITDA coming at 620 crores as well, above estimates of 575 crores. And the net profit at 505 crores, again, above expectations. The most important number was the volume number. That came in at 10%. This compares with street expectations of 4 to 5%. So Dabur, again, for the second quarter in a row, has outperformed street's volume expectations. And this makes the company's 5th quarter in a row for them to go ahead and report above double-digit volume growth. And that was led by strong outperformance from their juices vertical. Food and beverages actually grew by 43% as things have opened up. This is more of an out-of-home category. Hair care did well, home care and toothpaste in particular as well grew around 15%. That's higher than the growth that we saw in other competitors. Rural demand outpaced for Dabur as against urban, and which is better than what the industry has spoken about in terms of rural demand. And they've also increased their reach out there. E-commerce has done well for them. The stock was about 10% away from its all-time high going into numbers, trading at around 48 times. Let's see where it goes from here on.
Okay, Mangalam, thanks a lot for that. I just want to make a point here on Dabur, because I remember last quarter's numbers were also good, but the stock didn't really show that much excitement, because the street thought that those numbers were mainly because of the immunity products, because of that second wave of COVID. I think in this quarter, if they've done this kind of volume growth, I think that's a good number. And I think the street should like that. It's also corrected to its 200-day moving average. Just looking at the charts of the stock, I think it just corrected to 573 thereabout in this recent fall, and the 200-day moving average is 570. So perhaps bouncing from absolutely the right place.
Okay, all right. Let's get a view then on the stock. Anand, if I can come across to you, Dabur, the numbers look good. Mangalam says that everything is looking up. As Anuj said, the worry in the first quarter was some part of this was COVID related, immunity products. But now it seems they've done a beat again for the second time running. When you have 5-6% volume estimate and it comes at 10%, then it's looking quite good, right? Your view on the stock from here, 12% off the recent peak?
Well, I think generally that space looks quite interesting to me, because I've been a bit concerned about the inflation that is coming through, and to the extent that brand net players will be able to pass it on, it is quite good. More importantly, along with the volume, you will also get a price increase, and because of that, you'll be able to expand your bottom line much faster than you would have been in a situation where inflation was low. So I generally like the FMCG space per se. And within that, Dabur has a niche that their own Ayurvedic product range, etc., does quite well, and is an area which is growing much faster than perhaps equal products in the non-Ayurvedic space. So overall, it's extremely well positioned. Valuations, of course, overall are stretched, but not so much perhaps for FMCG right now, or given the correction. So at this stage, I would be somewhat overweight that space, and clearly Dabur is a leader in this area.
Okay, fair point. That stock's now seeing a bit of a bump up. By the way, just want to point out that it's a bit of a bipolar market today. The Nifty is not done too well, but the Bank Nifty and mid caps have done well. And just one more stock, TVS Motor, intraday chart. In fact, on TVS, Maruti, the laggards in the auto space have all of a sudden started to pick up quite a bit. And there it is on TVS, up about 5%. We'll take a break on that note. Up next, we'll track technicals with Sushil Kedia, founder of Kedianomics.